Welcome back to the channel, everyone. Thank you for tuning in to another video today. This is going to be a great video, so I highly recommend you watch it from beginning to end. I promise you, we're going to talk about the best way to master supply and demand when scalping the future markets. If you're a beginner trader, someone starting off, this is going to be a simple guide. Now, let me go ahead and throw out a disclaimer and let you know some things right as of right now. I'm going to be covering a more in-depth video, okay, on this topic right here. If you're someone that's really wanting to, or starting off this year, wanting or trying to learn the future markets and how to trade them in a similar way to how I trade, all right? The strategy I use, it's effective. If you don't believe me, you can come over to our Discord community by just basically scrolling down, finding the link down below, clicking on it, invite yourself in, and ask our fellow members there on the community, okay? What I want to say is this right here. I'm going to be doing a more in-depth, detailed video covering, breaking things down, going more into detail and in-depth of certain areas and topics. So if you're interested in really grasping or understanding the way and how I see the markets, how I read the structure of the market, I talk about market structure all the time. You know, the strategy I use, I'm going to break that down in detail, talk about points of entries and exits, stop loss details, things of that nature for those that want to, you know, trade or interest or do trade with hard stops. You're definitely probably going to want to tune in and become an elite channel supporter or member, all right? All you have to do is find the link to that tier down in the description portion of the video. There's a link there. It says become a member. If you click on that, you'll see two tiers pop up. The loyal channel supporter. The one you want to choose is the elite channel member or elite channel supporter. It's for $6.99 a month, okay? What do you receive with that? And I'm going to say this because people ask me all the time. They click on and send me a DM, and they want to become an elite channel supporter when I give out all the information how to in just about every video. But loads and lots of people have joined because for one, they're supporting the efforts of me as a content creator. That's what it's all about. And that's why YouTube offers that type program for individuals like myself, a content creator. But I'm giving away so much valuable information, not just on the public side, but also in the private community for those that are elite channel members or elite channel supporters. Become, elite channel supporter. For $6.99, I know most of you probably spend more than that on your favorite beverages, a cup of coffee, maybe a meal on the daily. We're talking about on a monthly basis, $6.99, and you get all this added value. Meaning you get the trade breakdowns. That's where I, behind the curtains, go into detail with you as you were sitting right next to me and break down my trades so that you understand my mindset leading up to the trade I took, why I took it, where I'm looking to get out the trade, and things of that nature, okay? I break things down. Also, you get the video playlist. Understand that. You get a hand-selected list of videos that I put in a form of link-by-link series of videos that you can click on and watch. So basically, I hand-selected, I pulled out or extracted from over 600 videos, approaching almost 700 videos on the channel now that I've extracted and made links to those videos. Those videos are the ones that I feel cover the most pertinent or exclusive information surrounding the way I trade. Again, I'm not telling anyone, please pay attention, to trade the way and how I do in any kind of way. These videos are not for educational purposes, even though lots of people watch them and have basically learned themselves, okay? If you don't believe me, you can come over to the Discord community and talk to some of the fellow members. First and foremost, I highly recommend you join the Discord. It's free of charge, okay? You can come over, you can ask questions about the future markets if you're interested in trading, and you can also join us on the trading channel, or the trading floor channel on the server, okay? That's where we as traders, we're posting our entries, posting zones that we're actually interested in trading from, and I'm on there engaging, and lots of times I'll throw out zones that I'm interested in trading from or looking at, okay? Meaning I'm waiting for the market to come back to them. But I don't want to go into detail about that. So if you're interested, I'm telling you right now, I'm going to be doing a more in-depth video surrounding this video here, especially if you're a beginner trader. It's going to be more so of a tutorial broken down as a guide about just kind of step-by-step basis of, how I trade, Okay, and I'm going to be going in detail, covering market structure, the strategy, things to look for when it comes to supply and demand style trading, low probability and high probability zones, stop loss placement for those that trade with stop losses, what in areas I recommend, and kind of where to get in and where to get out of the trade, and the things I look for when it comes to rejection. So without further ado, let's go ahead and jump into this video today. I want to put that out there. So we're talking about the best way to master supply and demand when scalping the future markets. For anyone, this is a basic to advanced guide that should help you. All right, now this is just a synopsis in general, but again, if you're interested in getting the more in-depth video that I'll be putting out soon, you can scroll down, click on it, and become an elite channel member or supporter. Click on that tier for $6.99. There's already tons of trade breakdown videos on there, plus you get the hand-selected list of a playlist of videos that are already there as well. So you can come over again and ask the individuals on the Discord, if it's helped them, and you'll find out for yourself what they say. All right, so basically when it comes to trading, all right, the charts that I actually use, I'm going to talk about that for one. I trade range-based charts. I don't trade time, volume, or tick. There's no specific reason or rhyme or why I choose, one over the other. I simply trade range charts because I started off using them, and I found out that when it comes to cleanliness, I should say, or just the overall view, it's easier and cleaner to the eye when I trade range-based charts. And maybe just a simple fact that I've become accustomed to them, so they've become easier for me to follow. All right, that's simply the only reason why. All right, I'm not knocking anyone that trades time or tick or volume based. If that works for you, I always say then use and stick with the style, or not say style, but the charts you use to trade with. So I trade range-based charts. Which charts do I primarily use? Okay, so when I'm trading the NASDAQ 100 futures, I'm just using for a higher time frame standpoint, the 60 range chart. All right, and then my entry chart that I'm using, the one that I'm scaling down to take my trades off of, is the 12 range chart. Now, a lot of individuals that have been following the channel know, even when I trade the ES, what am I using? What am I looking for? I'm looking at the 60 range chart as well. I'm always taking my trades off of, most of the time, the 12 range chart. With the ES, you can actually use even a lower time frame if you really want to kind of get more confluence, the 4 range chart. Okay, you'll see me trading that from time to time in past videos. Okay, so on the ES futures or the E-mini S&P 500, I use a 60. Okay, I use a 12. I use a 4. Also use a 24 range. I have like a 4 panel. You'll see me trading the 60, the 24, the 12, and the 4. I have all those up, okay? Sometimes you can also find setups off of the 24, using the 24 and 12 range chart. But when it comes to the NASDAQ, because it's such a thin and liquid market, you probably want to use slightly higher time frame when it comes to an actual entry chart. So that's why I use the 12 range chart. Some of our community members have maybe step it up a little bit more or higher, and they're using a 15 range chart. It just depends on your own preference. But for me, I take my trades off on the NASDAQ 100, the 12 range. Even on the ES, most times it's the 12 range chart. Okay? And I want to put this out there too. Because people always ask me, do I just always look for, a demand or supply zone on a higher time frame chart, mark that as my zone of interest and wait for it to come back to it? Or can I look for opportunities of trades to specifically focus in on the lower time frame entry chart, like the 12 range chart? Yes, you can. You can trade it either way, pretty much. I mean, I've talked about 2 different ways of trading in a sense. I talk about the actual strategy, that I started and covered in this channel about multi-chart confluence, basically using 2 charts in a sense. And the more confluence you have, like if you got the 60, 24, and the 12 lining up, lots of individuals have DM'd me and talked about clusters. Yeah, it works. I mean, basically you're using a higher time frame zone, waiting for the market to come back to it, scaling down once the market taps into that, either that supply or demand zone, and then using your lower time frames to get in or zoom in closer to an entry point. All right, meaning you're looking for an entry point on the lower time frame when the market is tapped into that higher time frame. So what I'm going to show you today is just using the higher time frame chart, the 12 range chart. Not 12 range, 60 range chart. The some zones. We're going to talk about some zones. Okay, on the higher time frame, and just basically what I would do when it comes to moving down to the lower time frame charts looking for an entry. All right. Now, can you take trades specifically from the 12 range chart and not even look at the higher time frame, the 60 range? You can, okay? If you don't look at the higher time frame chart, the only thing that you may get yourself caught up in is not really understanding the overall direction of the market. And you hear me time and time talk about taking trades with the direction of the higher time frame, because that's going to be your that's going to be your buddy. That's going to be your best friend, is knowing the actually how the market is trending, up or down, and then taking your trades from the lower time frame chart in the direction with the higher time frame. But you can still, sometimes, there's opportunities to counter trend trade, which a lot of people do. They're focusing in on the lower time frames and not really paying attention to the higher time frame. And I'm going to talk about that in that video where I go in more in depth in detail. I'm going to post that. It's going to be, a video that's going to go in great detail about trading also just from a 12 range chart, say for instance, okay? Same thing you can do. A lot of people trade time-based charts. Maybe you trade a 5-minute chart. You can trade the 5-minute chart without even, going to an hour chart or 4-hour chart or whatever your higher time frame chart is. You can do so, all right? Because lots of times you'll see on a lower time frame where the market looks like it's breaking, say, structure to the upside, just an example, and we're looking to take trades back to key areas of demand, right, off the lower time frame chart. You can do that. Even though the higher time frame still may be in the direction to the downside, that's called short-term scalping or short-term based trading, right? And just be mindful that the higher time frame may be bearish, but you're taking bullish trades against the trend of the market because maybe the market is breaking on a lower time frame structure to the upside. So I'm gonna go over things like that more so in depth in a video to be coming or soon to be coming on the elite channel supporters. So I recommend, if you're interested in doing so, $6.99 that you join. One way or the other, you get the trade breakdowns in the video playlist already, and so that's up to you. Okay. So yeah, I'm going to talk about, that's the reason why I trade the charts, the style charts that I trade, range-based charts. Now, what is supply and demand? In a basic nutshell, okay, without breaking things down into detail, because supply and demand, just all it is looking for key areas of aggressive buying or selling. If I'm looking for at a demand zone, for example, okay, I'm just looking for multiple candles, 2 or more candles coming out of a swing to the upside. After we've broken structure to the upside, and I see we got a swing to the upside, that break structure, and we have multiple candles that broke through that area or through that swing, from that area of demand, that's an aggressive area of buying. All right, I'm going to show you some examples here on the charts when I'm talking about supply, and we'll look at the demand as well. Okay. So an aggressive selling is just when we got multiple key areas of red candles coming out of a swing to the downside, creating the area of supply. That's just aggressive selling. That's all it is. As well, I'm going to show you about how I draw my zones. This is a personal preference of how I do it, and some people may do it a little bit different. Okay, but to me, I think it's the most effective way. So, but I'm not telling anyone to do it just like me. Okay. And I'm going to show you examples of low quality versus high quality zones as well. More in detail on that video that's soon to come. If you over on for the private members that become part of that elite what am I trying to say, guys? Elite channel supporter tier. Okay. But anyways, so let's take a look at the chart. Well, first of all, let's do this. Okay. Because what I want to do is bring over a prior video that I made on the channel covering market structure, okay, from my point of view. Okay, it goes into detail and it's already public. This video is public now. It's on the channel for individuals that are interested and really learning and grasping market structure. Market structure is king. It is key. It is essential if you really want to be able to become profitable and successful in the market. You've got to understand how to read the market correctly. Now, market structure is no more than, like I said, just following the flow of the market. Are we breaking structure to the upside, continuous in the trend, or to the downside? Now, look here. Let me explain this to you. We've got structure breaks to the upside. This is an example of a line chart, and then we'll look at the chart in detail, the candlestick chart, okay, or the candle chart, okay. So we got push up, a high, a higher low, higher highs, higher lows, and higher highs. Again, if you want to get more and understand the details of this video and where I cover market structure, I'm going to put it as an end cap at the end of the video. So watch the video through, okay? Because at the end, you will see two videos that'll pop up, and it'll be this one here at the end. And I highly recommend you watch this video, okay? So this is off the 60 range chart. And just as well, I use the same similar type technique when trading the lower time frame. So we got a push up, pull back, push up, pull back, breaking structure to the upside. So each time the market pushes up, makes a new high, is breaking structure to the upside. So if the market is trading to the upside, pulling back, then I'm looking for key areas of demand to trade from. This is an area of demand. This is an area of demand because we got a fall through, new high, breaking structure, demand. Break up, pull back, breaking structure to the upside, meaning breaking this area, demand. And the market can pull back to here or, I'm sorry guys, or here, okay? So the market starts to move to the downside, okay, after, maybe reaching some area of resistance or hitting an area of supply above, and then it starts to break to the downside. We got a low, lower high, and then a lower low here. Now, what happens at this point? You see we hit this area of demand. The demand area didn't hold here, okay? It broke through it. Once we break through an area, a key area of structure, especially on the higher time frame, be very mindful because now the trend may be reversing. The market could be reversing, moving to the downside. Now, what I like to see, okay, is once a key area of structure has been broken the first time, I like to see a follow-up with another break of structure to the downside. So it broke structure here, made a low, lower high, and then it breaks structure again. So I want to see a break of structure and then a follow through with the break of structure again, meaning swinging to the downside, breaking structure right here below this low right here. That's telling me, okay, now we got a reversal trend in the market, okay, or reverse in the market, okay. You may be asking, so if it just broke this key area of structure right here, will this not be, could this not be considered an area of supply? It could be. But be mindful because just because it broke through this area of structure, the market could turn back around. They could just start pushing the market higher and it break and take out this major swing right here. I mean, not major swing, this major area of structure right here at the top, this high right here. So be mindful. So typically when you see a breakthrough in area of structure after we've been trending to the upside, and then it follows through with a low, breaking that structure there, taking structure out, a lower high, okay, followed up with a new low here, then that's typically a sign of a market reversal right there, okay? So then at that point, this is a definitely key area of supply right here. The market pulls back to it. We look for the rejection to go short. And as long as the market then makes a low, lower high, and a new low here, we're just moving to the downside now on a trend reversal, moving lower. So then we're just looking for, just like here, supply, low, lower high, break structure to the downside, breaking below this low, pulls back right here. This is supply. Now, let's say I'm just giving an example. I went over this in detail in this video. It is public on the channel, so I highly recommend you watch it. Again, if the market comes down and breaks this area of structure and then turns around, pushes up, makes a high here, makes a low, and then breaks this area of structure right here to the upside. Okay, is that a structure break? Yes, it is. It's a minor area of structure break back to the upside. Okay, could this be considered an area of demand? Yeah, it could be. Okay, but again, in order for me to now see that the market is really starting to turn and we got now another trend reversal in the market, in a sense, I would prefer to see, a break here, broke structure to the upside, taking out a major or a minor area of structure, not say major, but a minor area of structure, pushes up, could pull back. This could be an area of demand, but I want to see break of the area, the break of the minor area structure here, pushes up, pulls back, and then break structure again as we got to swing to the upside here. We made a high, higher low, and then breaking structure right here. Now this is definitely telling me, okay, the market is probably trying to go up here and take out this major area of structure right here. Okay, so this would be definitely an area I'd be interested in for a demand setup, aggressive buying to the upside, breaking this high right here after we broke this key area of structure right here or minor area of structure here. Below here also, I like to use the volume profile. That's something as well that I'll cover and use or cover in the more detailed video that I'll put out, okay? So, on the pullback right here in this area right here, this would be a demand area, all right? Below an area, I talk about buying the lows, selling the highs. That means we're buying at an area of discount, selling at an area of premium. Keep that in mind. All it is buying lows and selling the highs, okay? This would be a discount area below a high volume area. I like to use the volume profile as a key, kind of like using it as a GPS in a sense. I never like to trade right at a high volume area. I like to trade below, okay? Below an area right here when I'm looking to go long, okay? And that's simply following the structure of the market. Higher highs and higher lows, breaking structure to the downside. Now we can look for key areas of demand to go lower, or if it starts to move back higher, we got a high here and it starts to break structure back to the upside, taking minor areas of structure out. Then I'll be looking again. The market's probably reversing again, or at least for a it could be for a short-term basis. It could be, you just never know. Moving back higher, breaking structure. So I'm looking to maybe capitalize on demand setups going to the upside. Again, now this is looking at the higher time frame chart. So we're going to go over. I'm going to use the higher time frame just to show you, because what it all boils down to is that when we're looking for, if we're marking zones off of a higher time frame chart, like supply, okay, or demand, then it's a strategy that I talk about, waiting for price of the market to move back or tap into that area or zone off the higher time frame. Again, you got to follow the structure of the market though. Once it taps into that zone, supply or demand, then we're looking for a step-by-step series of things to unfold. Okay, we move down to the lower time frame. I'm going to go into detail about things like this on that video that I will include and going more in depth and detail for the elite channel supporters or elite channel members, those that have either already joined, you have access to it when it's posted, as well for anybody who's new that definitely wants to gain access to that or gain privy to that additional information. Okay, so now that market structure video I was talking about, if you go to the channel, you can go to the channel as well. You'll see it's called Market Structure Made Easy. I highly recommend you watch that. I will also include it as a end cap video here at the end of this video. You'll see two videos pop up. It'll be the first one. Highly recommend you watching that. In the description portion of this video, or on any video here on the channel, if you scroll down as you know along or as well, down in the description portion of the video, you'll see a link where how you can become it says become a member. Click on that. You'll see two tiers pop up. You can become an elite channel supporter member if you choose to. And again, the rewards that you receive or the perks, you get everything that you'll receive in the first tier, as well as the trade breakdown videos, the video playlist, and you'll also gain access to this more in detail video surrounding mastering supply and demand. You know, basic to a more advanced level. Or basic to a more advanced level guide. Okay, it's kind of something that it probably would be titled. All right, so let's now do this here. Now I just want to show you some examples of like maybe supply and demand. I got some supply zones already marked up on my 60 range chart. Okay, but I also want to show, in showing you examples, I also want to show you how I draw my zones. Okay, a specific way, but also, you know, what is a low quality versus a high quality supply or demand zone. Okay, so let's talk about this. So, looking at the structure of the market, that's key. Understanding what's going on. We see the market has been making these lower lows and lower highs. So the structure of the market is bearish, it's to the downside. All right. So as we're moving lower, you know, we should be looking for on the higher time frame supply setups. Again, I'm not telling you that you cannot look from a short term or intermediate standpoint. Trades or demand setups on a lower time frame chart, but be mindful that if the market is bearish and then you start to see bullish activity form on a lower time frame chart and you're looking for demand setups to go long, that you're trading against the grain, meaning you're not trading in the direction of the higher time frame. Can you do it? Yes, you can. I do not recommend it for those individuals that are more beginners, that are starting off. The best thing to do to really get your footing and to really prove consistency to yourself is to trade in the direction with the higher time frame. It's going to be your buddy. It's going to be your best friend. Okay. And you know, like I said in the more in-depth video, we're going to be looking at using the higher time frame zones. Okay. And once the market taps into them, what is the next steps that I take in breaking things down when we look down then at the lower time frame chart, as well as looking at opportunities, even though the market may be trending to the downside or trending to the upside on a higher time frame, looking at opportunities where we can trade off the lower time frame chart, even without looking possibly at the higher time frame. I'm going to be covering that as well. So in this instance here, okay, same thing you're going to see. You're going to see supply and demand zones set up or form. It doesn't matter what chart it's going to be on. You're going to see supply and demand everywhere. It doesn't matter if it's on the 60 range, 24 range, 12 range, you know, the 4 range, or 60-minute chart, 5-minute chart, a 1-minute chart, 30-minute chart. It doesn't matter. You're going to see it all over the place. But there is a systematic way of that I talk about that people have found consistency or profitability, those that have understand, about using the higher time frame and being able to tap into, once the market taps into the zones, the next steps, the breakdown, the step-by-step series within the strategy, the things that I look for to take place once we're at a zone. Okay, I talk about that in videos. So here we have, say for instance, a supply zone. The market is moving lower, right? Why is it supply? Because we're breaking structure to the downside. When I trade, I always want to see a breaker structure. All right, it tells me that the market is still moving in a certain direction. Okay, break of structure is key. It's essential to my trading style and strategy, because when I see a break of structure, okay, again, it tells me that the market is still wanting to move in a certain direction. All right, so this is a supply area. Okay, key area supply, aggressive selling. All right, I talked about multiple candles. Red candles, all these followed up. We got 1, 2, 3, 4, 5 right here. The market pulls back to this key area of supply on the higher time frame. Okay, this is an aggressive area of selling. Now, if we look at this zone, I'm going to show you right here for an example. All right, look what happened when the market pulls back to the zone. I marked it. Is it still considered a supply zone? Yes. Now, what makes this zone low quality versus high quality is the fact that when the market pushed lower here, so we got to push down and pull back, broke a little lower, pull back, a little swing right here. This last bullish candle to the upside, that hammer candle you see right here, blow it up a little bit. Forgive me. Let's get back to it. Where we at? Right here. Right here, last bullish candle to the upside. Before it breaks lower right here, it broke lower. This red candle broke below that bullish candle there. The next candle that came down, the wick of it came back and it tapped the bottom end of that bullish candle. So typically there will be a gap or void that sets up a nice supply zone. In this case here, the market already came back and filled in that gap or void back at that area of supply, because it broke lower here, that candle there, bearish candle. The next candle came back, the wick of it, and tapped right at the supply zone. But how I would draw the zone, I'm going to show you, would be, since this would be a pullback candle here of a bullish candle right here, and then we have this bearish candle as well, I want to include the bottom end of that bullish candle, the wick of it, and the top end of that bearish candle right there. All right, that's how I draw my zone, and then I would draw it out. The market comes back to it. It can still reject the zone, but it's low probability because right here we didn't get a quick burst to the downside and the market, without the market coming back. It came back on that candle right here, that third candle to the downside right there. The wick of it came back and filled in any gap or void back at the zone that could be been created here. But it's still considered supply. Can the market retest an area of supply again and still reject it? Yes. In this instance here, the market comes back, it taps into this key area of supply right here. You see that? In that area right there, look what it did. It came back, it didn't break, okay, meaning close above it. It came back and it grabbed liquidity. If you don't know about liquidity, I highly recommend that you understand and learn about liquidity as well, because the market likes to grab areas of liquidity before it continues moving in that direction. That's what the institutions do. You may have thought that the market was breaking higher right here, and it possibly could have. But you have to also understand at this high right here, there's liquidity resting in the back of this high here, where the supply zone is resting right here. So the market goes back up to that area, breaks slightly above, wicks it out, grabs liquidity, turns back around, and then it starts running back to the downside. All right. So this is still an area of supply in which the market can reject, but it's a low probability area of supply because the gap or void that would have been created right here when the market formed the supply zone had already been, filled in a sense. Okay. So then we move lower, and you can see the market just start to move to the downside here. All right. Tapping supply, making lower lows and lower highs. It breaks structure right here. It broke right here below 443 and 3/4. So we got to break a structure. Is this an area of supply right here? Yes, it is an area of supply. Now the market didn't immediately pull back to it. So let's draw it out again. Let's take this away as if it wasn't even drawn. Broke below this 443 and 3/4 area after pushing lower here. Made a low, lower high, broke lower, breaking structure. This area here, we've got aggressive selling. 1, 2, 3, 4, 5. If you look at the difference, what took place here when the market broke below this last bullish up candle right here, the bottom end of the wick of it is right here. It broke below on this candle right here. Did the market immediately come back and fill in back up to that the wick of that bullish candle? No, it didn't. It kept running lower. Even on the pullback right here, it still didn't fill it in. So now we have let's move this lower. Now we have a void or gap back to this area right here of supply. Now, how far did it come back? It came back right here. So I'm going to mark this area right here because now we have this gap or void where it still needs to fill in back to this key area of supply. Now, how do we draw the supply zone? First and foremost, before we do that, if there is a gap or void left over at this key area of supply, is it an area of low probability zone or is it a high probability zone? It's a high probability setup because we have that gap or void. That's the difference of how I determine a low probability versus a high probability zone. So we take the zone, okay? Let's just, so I'm going to take this. I'm going to draw it from the top end of the last up candle, bullish candle, to the bottom end of it. But we also have a bearish candle that slightly broke, just slightly above the bullish candle. So I'm going to include the top end of that as well. And then I'm going to draw it down to the bottom end of that bullish candle. Right there. Sorry. Let's draw it out. Make it be clean. So it can be clean. Okay. And that's my supply zone. All right. Could the market have come back right here and filled it in and then get rejection right here? Sure could have. It definitely could have. But what it did in turn is it pushed lower, pulled back, made a lower high. Okay. Didn't come back and fill the gap or void and broke structure again. What do you mean broke structure again? It broke below here at 435 3/4. And then it kept running lower. Is this an area of supply right here? Yes. Is it a low probability, a high probability? It's low probability. Why? Ask yourself that question right now. Because the last bullish up candle, that was formed, and then we got the bearish break to the downside with multiple red candles. This candle here broke below that last bullish up candle right here. The next candle that formed to the downside, it came back and filled any mean of gap or void back to the bottom end of this last bullish candle to the upside. So it marks it to be a low probability zone. So that's why I didn't mark it. Okay. It runs lower, lower high, lower low. All right. You see it? Lower high, lower low. So we're breaking structure to the downside. Pulls back. Now, you could be asking yourself this. Oh, it just pulled back. It broke this high right here. Is that a break of structure? Yep, it is. It's a break of structure back to the upside. But be careful and be mindful because the market didn't do what I talked about using the line diagram. It didn't do this and break structure again to the upside. Had it done this, then this would have been demand right here, and this could still be demand right here. Is this considered still demand because we broke this area structure? Yes, you can watch out for that area, but to me, it's not a key area or zone of interest because we got the first break and didn't get followed up with a second break to the upside. And we're already bearish to the downside, so this is just a deeper retracement to push lower. If the market came back here and we could have rejected right here, it could have. It could have. But you have to scale down and you want to start to see a series of steps transform or take place on the lower time frame chart. Again, I'm going to go in more detail about that for the elite channel supporter or elite channel members, okay? If you're not already, joined, maybe you want to join. By clicking on the join button, that's all you got to do. You can click on the join button here on this video, or you can scroll down to the description portion of the video and find the link where it says become a member. All right, so moving on. We break structure again to the downside, okay? It pulled back here, it broke here, but then it broke structure again back to the downside. All right, so is this a supply area right here? It definitely so is. It definitely is a key area of supply right there. But what you have to pay attention to here, all right, even this is a break of structure to the downside. Is this supply right here? Yes, it is. Let's draw it out. Let me get rid of these little blue lines right here because we know now that that was a high probability zone and it hasn't tapped into it yet. Bring this back up here. All right, so we'll draw this zone out right quick. Supply right here. All right, again, the last bullish up candle, okay, we want to draw the top of it, but because we have this bearish candle right here before it moved lower, we have it broke slightly above with the wick of it. We're going to include the top end of that. to the bottom end or the wick of that green candle, okay? Market pushes down, breaks structure, pulls back. It taps into it. This is the point where you want to move down to your lower time frame, and I go into detail and talk about in many videos about the strategy, step by step, what to look for in the lower time frame and how to trade it. All right, so maybe on the lower time frame we didn't get the break of structure that we're actually looking for to take it, to possibly take it lower. Because right now we haven't broken any structure, meaning taking out any key area of supply here back to the upside, or taking out any key area of structure back to the upside as of yet. But it looks like it's trying to, right? So this would have been supply right here had this level held, or this level or this area of supply would have held, but it didn't. Pushed up, it broke through it, and it kept breaking higher. Then it breaks this area of structure right here. Okay, it broke this area of structure right here. It also broke this area of structure right here as it was retracing back to the upside or moving to the upside, making higher highs and higher lows. Even these little small incremental moves back to the upside. It taps into this key area of supply right here that we were waiting for way back over here from the prior day. But you have to be mindful once it taps into this area of supply now. Why? A lot of you individuals probably already know, they've been following my channel for some time. Because we broke key areas of structure as we were moving higher. So now, if we're breaking structure back to the upside, we're bullish. Because even on the higher time frame, we're bullish now because we're breaking structure back to the upside here. But still, could this supply area hold? Yep, but you have to be mindful of price action and what took place right below, okay, if the market taps into the supply area from the prior day that we've been waiting for because of the break of structures back to the upside, and possibly where it could actually react it, stop it, pause it before it wants to push higher. And because we are now bullish, we're breaking structure to the upside. We tapped into this supply zone right here. We tap into it. We can look on the lower time frame and look for that setup, look for the strategy setup, and look for the breakdown on the lower time frame to take it back down. But where could it possibly react it or reject it? Right here. This push to the upside, pull back, and breaking higher activity right here were areas we've got a push up, a pullback that broke structure right here. Little demand zones right here. Right here, a bullish candle followed another bullish candle. Remember I said at least two candles or more. Bullish activity to the upside. Retraces back. Breaks through this area here. When it gets up to this zone right here, supply, it rejects it. So be mindful of this right here, because this right here aided in the break of this area of structure over here. So look what happens. It reacts at the zone. It comes back to it. And then what does it do? It doesn't break down any lower. Okay? It holds at that demand zone and breaks higher. So we've got a push up, reacts, maybe look for rejection, take a quick scalp short. But be mindful of what's below you. When it starts to move lower, it reacts at these areas here that broke this area structure right here. Reacts, rejects the area, breaks structure right here above 492 and 3/4 back to the upside. Back to the upside. So now we're in a bullish mode to the upside. Is this a demand zone right here? Definitely so. So let's mark it off. But let's continue with the flow of the market to the upside. Let's kind of draw this thing out. Let's use the arrow here. Okay, breaking structure to the upside. Pulls back. Breaking more structure to the upside as it pushes. Excuse me, guys. Pushes higher right here. This is a demand zone. Back down here. It's breaking structure to the upside, taking out areas here. Breaking structure. Breaking structure. Now, is this a demand zone? Yes, it is. Let's go ahead and mark off to show you how you properly do a demand zone. Just quickly. All right. In this case here, the last bearish candle to the downside, which is this last bearish candle, we have to include the bottom end portion, including the wick of this bullish candle, because it broke below slightly this bearish candle. So from the top end of the bearish candle to the bottom end of that wick of that bullish candle, draw it out. And we'll just wait to see if the market comes back to this area of demand. Guys, I'm using references. I'm using the higher time frame to show, but it's the same type thing you can look for in the lower time frame. I'm just marking you and showing you supply and demand off the higher time frame. Again, I said supply and demand is universal. It's going to show up on multiple time frame charts. So I'm just using the higher time frame as examples because this is how and what I talk about when it comes to marking higher time frame demand zones, supply zones, and then using the lower time frames to look for and take your trades off of. Again, I'll cover that in the more detailed video for those that are already signed up for and who are elite members, and for anyone that wants to join as well, you'll have access to that when I drop that video. Okay, so the market pushes up, break structure, pushes up, lower high, breaking structure to the upside. Is this an area of demand right here? Yes. Is it untested? Let me move this line out the way. Nope. No, this is a low probability area right here because when the market broke structure right here above this high right here, 554, this next candle that came back, it tapped in on the wick of it right here to the top end of the last bearish candle. So that's a low probability area. Could it still reject it? Yes, it can. It did. It rejected and pushed a little higher. Then it turns back around the market. We got a low here. Breaks below this area. That's a breaking structure. Pushes down, pulls back, break structure to the downside. Look what happened right here. Is this a supply area? Yes, it is. But we're focusing on this demand area down here as well because we know this is the key area of untested demand, meaning that you hear me talk about untested areas in my videos time and time again. That means it's high probability. Whenever I say untested, that means high probability. When I say tested, that means low probability. So it taps into this zone right here. Okay, but before it does that, it makes a low, lower high, break structure to the downside, breaking through this area right here. Is this a supply area? Sure is. But is it tested or is it untested? It's already tested. It breaks lower, it pulls back right here, and it taps right back into that zone there. It broke structure here. This is the swing the 80 in the breaker structure right here below this area here at, what did I say, 511.5. So we have that right there, right here. This is a supply zone, but it is a low probability tested zone. It still pulls back to it and rejects and pushes lower. I like to take my trades from the high probability zones. Sometimes very slim chances if I get enough rejection and I see it really not trying to, say for instance, push higher here at this tested supply zone right here, will I look for an opportunity to go short? Yeah, I will if I get enough rejection. But anyways, we break lower and we tap into this demand area right here. Look what happens when it taps into it. It actually breaks deep into the demand zone. And that's one thing that I talk about in videos here, and I'll talk about in that video that I put out more detail for the elite channel supporters or members. Now, when it taps deep into a zone, you want to be very, very, very mindful because the more that it pulls into a zone, more than likely it's going to try to break through that zone. In most instances, sometimes like it will pretty much drop deep into the zone and then wick it out, grab a liquidity, and then push higher or push higher. Like an example right here. Look what took place right here. It tapped into the supply zone, right? It tapped deep into it. It wicked out of the supply zone, but it was grabbing liquidity. Then it turned around with a momentum bearish candle to the downside and started breaking structure lower. So that was a liquidity grab. That's what we like to call that. Liquidity run or grab. It pulled deep into the zone. So when you see things like this where it drives deep into the zone, be very mindful. But also think that, okay, are they just trying to grab liquidity and then turn the market around? Look for those signs of rejection, especially when it taps into the zone and then where it maybe on a lower time frame it starts to show you some key areas or key signals of rejection. But in this case here, when you see something like this, especially if you're a beginner, I would stay away from trying to take this thing and trade it short. Because for one, it broke deep into the zone. For two, it actually broke above the zone because it wicked it out. It took it out. But it didn't close above it there. But it did drive force to the upside here on the higher time frame and wick it out. On the lower time frame, if you look at your lower time frame, you probably will see where the candles actually closed above that area there, above the supply zone. So in this instance right here, it wicked out the bottom right here. It took out that zone. We drove deep into it. Again, if you're a beginner trader, I would be very, very mindful and possibly not looking to trade to go long. And one of the major reasons why as well, because we started to break structure back down to the downside. So keep that in mind too. We're breaking structure back down to the downside. And because we're doing that, okay, moving lower, broke structure here. Moving lower, broke structure below here at 492 or 493.5. Breaking structure here. We tapping now into this demand zone. We're tapping deep into the demand zone. We break through the demand area, and we've already started to break structure back down to the downside. That's a sign to stay away from that zone because it's probably trying to run what? Lower. And it does. It pushes lower, pulls back, breaks lower here. Okay, it breaks lower here. It breaks through that demand area. Haven't quite broke through this full swing here below this area of structure right here at 446.5, but it does. It breaks lower then. It breaks below 446.5 right here. Pulls back lower. Okay, so it broke structure to the downside. Now, is this a supply area right here? Yes, but it's tested, which means it's a low probability area. So more than likely, I'm not looking at or have interest in those areas. Again, I like to trade those untested high probability zones. Is this an untested high probability zone right here? It sure is, because we're breaking structure to the downside. We broke through this area here. We broke through this area here. This is supply right here. Now, when the market starts to retrace back to that area of supply, it's untested. We have a gap, a void back to the zone. Let's mark that area or gap, a void back to the zone. Let's do that right quick. I want to show you. Oh, sorry. That's not what I wanted to do. Right here. It breaks through the bottom end of that bullish candle. Right here. That bearish candle takes out that bullish candle, last up candle. This is the next candle here. Does it come immediately back and fill in the gap or void back to the supply zone? Nope. That's as much as it does right there. So we have a void or gap back to that zone, making it a high probability zone. Now we can draw out the supply zone. Top end of the bullish candle down to the bottom end of the bullish candle. There we go. So all we're waiting for is the market to come back and fill in the gap or void back to the zone there. It taps into the supply zone there. Be mindful though, because you probably are thinking right now, well, we just broke structure back to the upside. We did. We broke structure back to the upside here. But can you look to take an opportunity to go short here? Definitely can. Definitely can. So it taps into the zone right here. Once it taps into the zone, again, part of the strategy is I move down to the lower time frame. I'm looking for the key area or the rejection to take place. And we're looking, I'm just going to say this right now. When we tap into, say, for example here, this untested high probability supply zone, I move down to the lower time frame. I'm looking for a structure break to unfold there. I'm looking for the market to come back to it, reject the zone, supply zone, now that form on the lower time frame, and looking for to go short. Where could I be aiming to take my short back down to now that we tap into this higher time frame? Untested high probability zone. Back down to this area right here. That'd be a beautiful trade. This was a beautiful trade. I didn't trade Friday. I threw out, I put out a message that I won't be trading Friday because I had some other things to take care of. But if I saw this right here, and then I'm looking down my lower time frame, I saw this supply zone. It's untested, high probability, and then I'm looking down my lower time frame. I'm taking this trade back down to at least this area right here. At least this area here. Why? Because this is a demand zone now. This is a demand zone, the 80N, as the market was pushing higher here. Bullish activity to the upside. No quick pullback to this demand zone. So now this is a high probability untested demand zone. We broke structure way back to the upside. We broke it above this area right here. So supply back down to the area of demand. You hear me talk about that all the time. Supply to demand, demand to supply. But you have to be able to pay attention to the structure of the market and pay attention to price action. Once we get back to this area of supply right here and what took place down here when the market broke structure back to the upside here. But I'm definitely looking for it because I'm paying close attention to price action to take it back down here. When I see things like this, tap into a higher time frame supply area, and then I'm looking down below and seeing that we broke demand back to the upside and had this aggressive buying right here. And I'm looking at price action activity. I'm saying on the higher time frame, I'm saying this thing can go all the way back, come all the way back down here. So we get rejection in this area up here. And just not that, I'm paying attention. I'm looking at this now. Look here. We have supply right here. Breaking structure to the downside. We have supply, untested, high probability zone. High probability zone. And we have a round number, 16,500. Multiple confluence at an area or zone. Look for the rejection on the lower time frame. When we get the rejection, we can look to take it back down to this area right here around 53. Simple, simple, nice, beautiful setup from supply back down to demand. Okay, multiple means of confluence or confirmation there. But these are the things I'm going to go into detail more about, and I'm going to break it down. We're going to show you examples of when the market taps into the higher time frame zones, moving down to the lower time frame, what we look for. Okay, talk about also, if you're someone that uses a hard stop, where are opportunities to place your stop at? You hear me talk about at the back end or top end of an area of supply or demand, but you can also, if you're really trying to control and have proper risk management, talk about supporting swings and where to put those stop losses at as well, so that you can save yourself much drawdown. You can get out of a trade quicker, and this also give you some pointers or tips of what if the market comes back against you on a trade setup? Because you should know this, guys, that the market, even though it may tap into a higher probability zone, that doesn't mean that that level is going to hold at all. The market's going to do what it wants to do. It can blow right through an area. It may not want to hold it at that area and break through a higher probability supply or demand zone. Trading is all about probability, so understand that. So we just look for the next setup. But what I want to say to you is that I'll show you, examples of things to look for, signals or signs to get out of a trade quick enough so that the market doesn't even tap or take you out at a supporting swing where you can get out the trade sooner or quicker. So instead of it hitting your stop loss, basically what I'm trying to say is that you can get out the trade quicker and save yourself some money or capital from being lost. So I'm going to talk about those things when I create that video, guys. I'm going to do that video. I'm going to try to put it together here, possibly by weekend this week coming up. But again, if you want to join, click on the join button. Simple as that. But this video is showing you, I gave you an example of how to really read the market when it comes to mastering market structure and using, supply and demand. It's critical. You master market structure, supply and demand should be easier for you. I showed you high probability and low probability, what to look for. I showed you what makes it high probability and low probability. We looked at market structure. I'm going to go into detail and talk about those things again in that video that I'll be posting for the Elite Channel supporters or Elite Channel members, okay? But that's all I have for you guys today in this video. I just wanted to kind of give you a quick rundown of the charts I use and covering those critical things that I look for in my trading. It's critical. You must understand this. The more you practice it, the more you do it, the easier it gets, okay? But look, if you're interested in joining the Discord, find the link down in the description portion of this video. I know this video is a little bit long-winded, but I do these type of videos because I want to see people really and truly become profitable and be consistent. And you can do this. But market structure is key. It is key. It is the essential element to really transforming your trading. If you're someone that's struggling in your trading, look, if you understand and master market structure, you are going to see your trading transform. I'm not guaranteeing anything because there's another and bigger component to trading, and that is the whole psychological aspect of it. Being able to control who you are as a person, being able to control the fear, the greed, or someone who's irrational in thought. If you're an impulsive trader, you got to control those aspects of yourself as well. But this is how you master supply and demand when scalping. Okay? All right, I'm jumping off here. I wish everyone a great rest of your weekend. We're getting ready to move into a new trading week, and I wish you nothing but much success and practice and try to be green on the day. You guys hear me say that all the time. The key to trading and being profitable is being green on the day. You will take losses, whether they're small but you want to cut the big losses. Okay, all right, you definitely want to do so. So again, you want to really focus on being green, and if you take a loss, just quickly be able to rebound from that. All right, try to really focus in on the higher probability zones or setups in the market. I showed you on a higher time frame, some of the key zones to look for. Then it's all about moving down to the lower time frame. I'm going to go into detail about that on this video that I'm going to be putting out for the elite members, okay? So, but outside of that, please take the time to go ahead and click on that sub button, subscribe, become a channel member today. Make sure to turn your post notifications on by clicking on the bell so that you never miss one of the uploads here on the channel. A lot of valuable content on the channel. If you don't believe me, you can ask the members on the Discord community. And last but not least, if you found value, even though this is a long-winded video. Sometimes, guys, it takes time. You have to really. That's the thing that I do. I break things down. I'm just not just quickly throwing it out there. I want to clearly go over example after example so that people can get the gist and understanding. Because some people learn different than other individuals, and sometimes we have to see it more visually and be broken down through a series. Okay, so please make sure that if you found value in the content of the video, drop a like on the video. I'll see everyone in the next one. Take care and have a good rest of your weekend.